This is Al Brooks. Thank you for watching the Brooks Trading course. This is the first of two videos on final flags. This first video is my definition and some examples of final flags. I've said repeatedly that most reversal patterns involve trading ranges. A final flag is a trading range. When you look at a trend, and then the trend reverses, the trend is made of a series of flags. Some are big, some are very small. Ultimately, one flag is the final flag in the trend, and then the trend reverses. Here's a small triangle, a small trading range, another small triangle. A flag is a pullback, and a pullback means the trend usually resumes instead of reverses. However, at some point you get a flag, it leads to a breakout and the end of the trend, followed by a reversal. Here's an example of a triangle, 3 pushes down, 1, 2, 3, so a triangle, and this one had a 4th push down. Whenever you get a horizontal trading range late in a bull trend, after 20 or more bars, you have to be thinking that it might be the final flag before a reversal. A trading range, a horizontal trading range, is an area of agreement. If the market breaks above that area of agreement, it often discovers that the price is too high and it has to reverse back down to that area of agreement, and sometimes it continues down. Here's a bear trend. There are several flags along the way. A reversal attempt after 5 consecutive bear bars, probably minor, which means a bear flag. The trend will continue down. And all the way down, we have small bear flags, double top bear flag. We have a bull trend here, and here's the final bull flag of that bull trend. Every trend, even if it's a small leg within a trading range, can end with a final flag reversal. We have a bear trend, an III pattern, 3 consecutive inside bars. The bear trend resumed, but then it reversed. So this was the final bear flag in the bear trend. We have another bear trend here. We have a rally, a reversal attempt. When the channel is this tight, the first reversal is minor, and it became a bear flag. You can call it a double top bear flag. The bear trend resumed, but then this was the end of the bear trend. The trend continued up. This was the final bear flag in this bear trend. Here's another bear flag. At this point, you don't know if the bear trend is going to continue down or reverse up. Here we have a bear breakout below this flag. The breakout did not go to a new low, but in fact, it was also a final flag in the bear trend, this time resulting in a higher low. This is a final bear flag. This is also a final bear flag as well. The market's going up. We have a small bull flag, and it was the final bull flag in this leg up. The market reversed down. We now have a bull swing, maybe a bull trend. Breakout, a pullback. Odds are the trend will resume, so this is a bull flag. Yet, it became the final bull flag. We have a reversal down, or at least an attempt at a reversal down here. Also here, we have a couple legs down, 1 pullback, 2. This bar went above the high of that bar. The bull trend tried to resume. This is also a final bull flag before we got a reversal. Sometimes, as I said, you can have a bear trend and a breakout below the bear flag, and the trend reverses, but the breakout did not go to a new low. Likewise here, you have a bull flag and you have a small breakout. The market reversed without first going to a new high. Sometimes the final flag breakout does not lead to a new extreme. Bear breakout below a bear flag, yet the breakout reversed up from a higher low. A breakout from a bull flag, and the bull breakout reversed down from a lower high. 2 legs up, you can call this a bigger bear flag, and we have a bear breakout, yet the bear breakout reversed up. This is also a final flag. This is a final flag, led to a new low and a reversal up, a small final flag here, a bigger final bear flag here. We have a bear breakout, yet no new low, and the reversal up took place from a higher low. This is still a final flag in the bear trend. Back to a bull trend and a triangle. The purpose of discussing final flags is the final flag in a trend often has some characteristics that lead traders to expect that the breakout will fail and lead to a reversal. So it's important to recognize when a flag might be the last one in a trend, because then if you take the buy, you'll take quick profits and you'll be starting to look for a reversal trade. We have a bull trend and a bull breakout above the top of the channel. The market might be going too far up. We tried to reverse down here. Sometimes the first reversal attempt fails and you get a resumption of the trend and then a second reversal attempt. Here we have a lower high. Here we have a double top lower high major trend reversal. It became a triangle and we got a bull breakout. So the top failed. However, whenever you have an attempt at a top late in a bull trend and the trend resumes, always be prepared for another reversal attempt. Bull trend line. We broke below the bottom of the bull trend line by going sideways. That warns traders that maybe if the trend resumes up and tests the prior high, the bull trend will fail and reverse down. All bull trends always end at resistance. If you have a horizontal flag forming just below some resistance level, that flag might lead to the final leg of the bull trend, a test of the resistance and then a reversal down. And because of that, it's always important to be looking for support and resistance. You see a clear breakout. Whenever you see a breakout, you have to be wondering if it's going to lead to a measured move. We broke above this high, so maybe we'll get a measured move up from the bottom of the bull trend to this high, the breakout point. It's good to make a projection up and see how the market behaves when it gets near that projection. And you can see we tried to go up, failed, tried to go up, failed, tried to go up repeatedly, and could not get above that potential resistance area. And we have a horizontal bull flag lasting a lot of bars late in a bull trend. Those are all features that make traders be prepared for a reversal trade, or at least the end of a bull trend. You can see initially the bull trend reversed down, but stayed sideways for about 20 bars. So initially the final bull flag led to an end of the bull trend and the formation of a trading range. And once it was in the trading range, the bears then were able to get a breakout and a bear swing. Bull flag, 20 or more bars into a bull trend, possible final flag, trying to get above a measured move target, resistance. And then look at this rally. We got a pullback, high, and then a pullback, high, pullback, high, pullback. 3 attempts up, every one of them reversing. So we have a wedge, higher high, and it's also a major trend reversal. Increases the probability that this is going to be the final bull flag before at least a couple legs sideways to down. Maybe 1 pullback 2, maybe 1 pullback 2, maybe 1 pullback 2. Traders are going to be looking for some kind of a correction, a wedge top, a reversal pattern, a potential final flag at a resistance level. The bull trend probably is going to end for at least 10 or 20 bars, and you might get a swing down. Can you sell below this bull bar? I would not. We have 3, 4 decent bull bars here. I would take a second entry short, preferably below a bear bar. This is maybe a small bear body, I really can't see, but it's an II. This bar is inside that bar is inside that bar. That is a small triangle on a smaller time frame chart. And an II pattern late in a trend often leads to a reversal. It's also the apex of a wedge at a measured move target. All features that make traders willing to sell below this low. And you can see what happened when the market traded below the low of that II. We got a bull breakout above the II that immediately reversed with a big bear bar. That tells you that a lot of traders sold as soon as the market went below this small inside bar. There are several things about a bull flag late in a bull trend that make traders wonder if it might be the final bull flag. We have a series of buy climaxes, bars here, one bar here, one bar there, a couple bars here, several bars here, with very little in terms of a pullback. When that happens, the odds of 10 bars, 2 legs, or more start to go up. In other words, the end of the bull trend is becoming more likely. A sideways trading range. You have a bull flag here, a pullback, but at some point, once it starts to grow 10, 20 bars or so, traders stop calling it a pullback and they start calling it a trading range. A pullback means they believe the bull trend will resume. But once it has about 20 bars, the probability of a reversal down becomes as high as the probability of a resumption up. So a pullback that grows into a trading range late in a bull trend increases the probability of a reversal. Sometimes it simply reverses down from this double top, lower high major trend reversal. Other times it breaks to the upside and then reverses down. Always pay attention to support and resistance. And here we have a rally that's repeatedly trying to get above resistance, and it keeps failing. Late in a trend, 20 or more bars, without much pullback, especially when there is a series of buy climaxes, chances are the trend is going to end and either become a trading range or reverse into an opposite trend. The pullback grew. It's still a bull flag, but at this point, I would call it a trading range, meaning that the probability of the downside breakout is about as high as the probability of a resumption of the bull trend. Because the market stayed sideways for a lot of bars, the bears were as strong as the bulls for a lot of bars. And that means that there is an area of agreement. Both bulls and bears believe this is a fair price. If it goes below the fair price, bears will be less willing to sell, bulls more eager to buy, and it'll come back to the fair price. If it goes above the fair price, bulls are less willing to buy, bears are more eager to sell, and you have to assume it's going to come back to the trading range. Trading ranges have a magnetic pull. Magnetic pull, increased probability that any breakout up or down will fail. Remember my 80% rule, 80% of breakouts of trading ranges fail. The market raced up to the measured move target. This is strong enough up to expect at least a small second leg up. This might be it, this might be it, this might be it. The market got vacuumed up to the measured move target. The breakout of the triangle failed, and the market reversed down strongly. And again here. It's a common sequence. You have a trend that lasts for 20 or more bars. It forms either a high 2, a double bottom bull flag, a tight trading range, a triangle just below resistance, and that often becomes the final flag. Traders have to be ready for the breakout up to the resistance level to fail and for the trend to end and form either a trading range or a reversal down. We have a bear trend. You can draw a trend line here, and we have a bull breakout above the trend line, testing the moving average. The bulls have 5 consecutive bull bars here, breaking far above the trend line. You have to be wondering if this is strong enough to indicate the next reversal down will be the final one, and the bulls might be able to take control. This reversal up from a very tight channel, probably minor, so you assume the reversal up will be a bear flag, and that there will be at least a test down of the bear trend low. Strong breakout, expect at least a second leg down, pullback, second leg down. A breakout, so look at the breakout point, and then look at the start of the trend before, and then project down to a measured move. That is support, and the market will find buyers there. Bears will take profits, and bulls will start to buy. The market got vacuumed down in a hurry to support. And remember, every bear trend ends at support, although most support will not stop a bear trend. This is a minor reversal. This is not a higher low or lower low major trend reversal. This is not an obvious wedge bottom. It's a minor reversal, which means it's probably going to be a bear flag, or it'll probably lead to a trading range instead of a resumption of the bear trend. And we got an attempted resumption of the bear trend, but it did not last very long, and the market ended up in a trading range. And ultimately, there was a higher low major trend reversal, and then a reversal up into a bull trend. Wedge bear flag, late in a bear trend, 20 or more bars, and there's a support level just below the bottom of the trend. Second leg down likely after a strong bear breakout, but not necessarily a third or fourth. So this next leg down might be the final leg in the bear trend, and this might be the final bear flag, the final flag in the bear trend. We have an attempt to reverse up, but a weak buy signal bar after two big bear bars, probably a minor reversal. And now we have a second attempt to reverse up at support after a potential final flag. This is a reasonable buy, looking for at least a swing up, probably two legs up. You could call this a lower low major trend reversal. However, with the sell-off as strong as this is, probably the first reversal up will be minor, which means there probably will be a deep pullback and then a trading range, instead of the market just going straight up. A final bear flag is more likely if the bear flag is right above support, like a measured move target or the bottom of a channel. If there is a series of sell climaxes, in other words, an exhausted trend, and the bears probably will stop selling and wait to see if the bulls can reverse the market. If after 10 or 20 bars the bulls are unable to reverse the market, the bears will try to sell again. But when there's a series of sell climaxes, a lot of times the bears will stop selling, they'll take profits, and wait to see what the bulls can do. Late in a trend, 20 or more bars, without much of a pullback, if you get a pullback, that pullback might be the final flag in the bear trend. The trading range is often sideways, but sometimes it can be up like this, a wedge. Here we have a strong bear breakout. Expect at least a small second leg down, maybe second leg down here, maybe second leg down here, maybe all the way here. Bear trend, pretty good break above the top of the trend line. The trend lasted 20 or more bars. We have a low 2 here, low 1, low 2. You can also call this a double top bear flag, and that is also a low 2 short. So some kind of a horizontal range after the bear trend has gone on for 20 or more bars. It's a halting of the selling. The bulls are becoming balanced. They're becoming as strong as the bears. And therefore, if you get a resumption of the bear trend, that resumption might fail, and the bulls will become more eager to buy. If they're willing to buy here and stop the bears, and the market goes lower, the bulls might be even more eager to buy, as they were here and here. Support, we have a triangle and a bear breakout. This is a measured move down. Another low 2 here, low 1, low 2, double top bear flag. If you want, you can call this a lower low major trend reversal here, and then another attempt here. And this is a second attempt. It tried to reverse up here, fell below this low, and reversed up even more strongly here. Traders will buy above that bull bar. A lot of traders will buy above this bar, although with 4 consecutive bear bars, this one closing on its low, a lot of traders will not take the first reversal up. They'll wait for a second entry, a micro double bottom. You can also call it a wedge, 3 pushes down, 1, 2, 3, and the third push subdivided into 2 smaller pushes. The bulls will expect the bear breakout to fail, just like it failed here, and it's failing here, and it tried again here and reversed up violently. Bulls will look to buy for at least a couple legs up, 1 pullback 2, or 1 pullback 2. In this first video, I defined final flags, and I also gave several examples. I'm Al Brooks. Thank you for watching the Brooks Trading course. This is the first of 2 videos on final flags.